Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. In addition, this is based on a structured trade approach using trades that you can reverse engineer and vet and create a business plan for operating in a random environment. The business of trading is really a gaming process or interacting with the other participants when you have a statistical edge. Trader Lab's a community of like-minded traders who come together to leverage their collective experience, and the Trader Lab is available to all of you at no cost. And if you're visiting in YouTube, there's a link in the bottom of YouTube. You can access the Trader Lab and all the resources of the Bookmap Discord community. And this involves, of course, order flow with a high-tier tool like Bookmap and other processes, stocks, options, crypto, market maker behavior, algorithmic behavior, and a lot more. All of this is available at no cost, and the Trader Lab especially is available to you, which is a community of traders where they come together to leverage their experience. It doesn't matter how long you've been in the business and even what process you use. The thing is, you might be able to further advance your development as a trader, especially if you keep waking up in the same place, which I call Trader Groundhog Day, trying to fix a process that might not actually have a statistical edge. And because of random outcomes, it's very easy to think you're on the right path, but that path might just be a defective process, and because of random success with it, which we've all had, and we all have, even if we don't have an edge, we're going to think it's really about just making it better. It's logical, but it is not what trading is, in my opinion. So taking that into account, let's get started. Now, remember, this stream is about education. It is not a trade calling room. If we get into real-time behavior, we'll talk about it. This stream is about helping you understand market mechanics, how the market works, why it does what it does, how you might get in alignment with it. In addition, in the Trader Lab, there's a library of webinars on this. There's 60 PDFs of structured trades you can download to reverse engineer, make them your own, and the community. In addition, what I show here in the stream is how the market operates. If you don't understand market mechanics, then I don't believe you really have a good potential to actually maintain yourself in this business. It comes down to how does the market work, why does it do what it does, and how you might at times get in alignment with it. Thanks, Stan. By the way, guys, I'm streaming from Costa Rica. If the stream goes down, I will resurface. So if you're in YouTube, don't go away. If you are interested in this stream, it will come back up. Yesterday the stream went down, and I have learned that it will be put back together with a little editing and scotch tape, or more likely duct tape, and it will be available. Now let's go take a look at what our situation is in the higher time frame. Well, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, lovely. Let's go. Maybe. Takes a moment here. Hold on. Got a lot of stuff here. Okay. This is the day before yesterday. And if you remember in the stream, we identified some levels. Let me just see if I can get this. 59.60, 59.80. This is before yesterday. Let's look then, and there's more. You say, really, there's more? Yeah, there's more. Take a look at this. Now, this is auction market theory, and you might wonder why anybody would look at these things and think maybe you can trade with it, because this is not indicator based. This is based on participant behavior. It's a different way to look at the market, and it might differentiate your outcome from, shall we say, typical retail traders who are looking to predict where the market's going to go. Now, I'm of the opinion, and it's only me and my experience, that you can't predict anything. So if we take ourselves out of the prediction business, maybe this is more like an alignment business. Can I get in alignment with the participant behavior? So let's remember yesterday's downside target. It was 71.25. Let's remember key levels from this day and the previous day, 80 and 60. Now let's look at the day following. The day following, what was our levels? 60 and 80. What did we do? We went up to 80. Too high. I'll see you later. And then what did we do? We came out and took the previous day's low out, which was a target at the end of the day. Now, what's the condition of the market? Now, there's more to this naturally. Well, the market went up, so we have longs in this leg. The outside edge of this distribution, let me make sure I've got the right level here, was there. So this was our outside edge. The bottom up, and this is moved down. Yesterday it wasn't here. And the outside edge was down there. So I believe that was it. Don't have it right in front of me. And if we break out the bottom of this distribution at the time, then our target was here. So let's see what it does. Just follow the yellow brick road. And by the way, oh, wait a minute. Where was our target yesterday? So what do we test? 80, remember? 80. And what about 60? I'm losing my place here. Here, we get below 60. It's the Acapulco cliff dive. Then we have a target, I think it was 36. Remember that number. And coming out the bottom, what's our target? 74.75. I think we are 71.25, and I think wherever we got, but we got pretty close to it if we didn't tag it. I can't remember. 74.75, target 71.25. In the auction world, that's a direct hit. Is everybody tracking so far? How we doing in YouTube? Are you guys tracking? And remember, if I lose the internet here in Costa Rica, which is easy, or power goes out, which it does for no reason, I will come back. Just remember that. Is everybody tracking? How we doing in YouTube? Are you guys with me? And the Bookmap Discord Trade Lab community? Are we tracking? This chart, I don't know if you're asking about this chart, this is coming from Investor RT. Now let's remember these levels. You'll see why. This is the auction. One moment, I've got to get this, try to shrink this down. I am operating off a laptop from Costa Rica. I will tell you, working with the laptop, now there are 3 monitors, but that's besides the point. Hold on. So I'm trying to move things here. It's a little hard. Hold on. Bear with, please. Got to move things around. It's not easy. Okay. So this is our RTH open. Let's go back and think about our levels. We have 36, which you remember was an important level. I'm going to try this again. Which was there. That's your 36. Down here. We have the ETH high, which is sitting around 45, which is there. And don't forget, we This is today, by the way. And we have 59.17 below us. And we have this high above us and 80. So 60, 36, wherever it is again, lost it here, 80, and this high, and down here. So all of this is possible, not predictable, possible. So let's come back, and this is where these levels now you're going to see in Bookmap. All of this is part of having a trade plan, and we're not in the prediction business. In fact, all of this is going on in Trader Lab all the time. Conversations, interaction, discussion, and everything else. And you could see this is what's going on in Trader Lab. There's a lot of interaction. I'm constantly narrating in here, throwing ideas out, challenging the participants to think. The idea is this is not a trade calling room. This is about stimulating interaction and thought and debate. Because as traders, we can operate in different time frames or fractals, see different things, extract an edge, and build a business, no matter what. So one person's long can be another person's fade, and they both can come out on top. Isn't that interesting? One moment, something just went bump in the night here. Well, hopefully, one moment. Okay. So let's go. So we have this level. Let's look at some more levels. Remember, we have 60 as level. All these are on the chart. We have 67.50, a very important level that I was referencing all morning as a possible outside edge. And then we have, what was that number? The magic number, 80. All of these are on the chart as you see them before RTH open. This is what the auction is all about. And then there's yesterday's high. What do you think set yesterday's high? Stops. So, fine. And all right, this is the RTH open. This is a micro composite low volume node. I'm going to have to skip ahead now because of time. Hopefully this stream will get pasted back together, or maybe not. So RTH open, 8:30 Central Time. Now what we're looking for is a potential squeeze. Now there's no way to know, except yesterday we came inside after we broke out and got down towards our target at 71.25. We got the 74. Again, the direct hit. And then we came back inside that consolidation. Remember, the market goes up to go down and the market goes down to go up. What do we know about yesterday? Shorts in the market. So what does that do for us? Well, if there's no continuation, then the possibility is those shorts might get squeezed. Okay, here we go. So now I'm going to narrate this. This is an action. Now, these trades are not recommendations ever. And there are statistics that suggest to us up. The ETH high, we're opening near the ETH high. And what did we do? Remember 36, an important level. And it's listed right here as an important area. What else do we know? Overnight mid and the overnight volume point of control. This is the retail price from the ETH. Well, if we're opening inside of yesterday's range and we left the retail price down below, which is here in the settlement in the ETH low, maybe these prices are too low. And if I open up here and I'm opening near the overnight high, maybe we want to think about this and not get short, but get long. Or either one. Does it matter? I don't know. Let's look at the yellow brick road. Let's follow structured trading based on the auction. Let's look. Now, RTH open. Now, right here, we see our sellers. Okay. Now, I don't know who sells when you get a move like this, but there's always going to be somebody on both sides of your trade. So let it go at that. But now, if this is the open, and this yellow line represents the highest volume in the RTH. Now we're in 7 seconds. In 7 seconds, I blink my eyes a couple times. That's about it. So right here becomes something called a variable high volume node. Now these are not actionable. They are informational. And I label it, I call it a variable high volume node. So let's just see what goes on here. So I know the market is short. I know I tested a key level. I know the probabilities are I'm going to take out the ETH high and squeeze. That's what I know. That's all I know. I don't know anything else. If anybody tells you they know, they're full of baloney, because we don't know. But here's what we do know. We know at the moment this volume here and these sellers here are getting absorbed. How do we know that? Well, there's an iceberg there. There's some stops coming out there. Okay. And look at this. Pretty aggressive buying, don't you think? So this seller was absorbed. Now, this is order flow. This is where the volume was, and it is suggesting maybe, underline, maybe this is too low, because this is where high volume is. And the nature of the way the market works, market mechanics is there's a seller here, passive, and there's a buyer here, passive. I come down here, right now these sellers are in control. When I come across, it means right here, and you don't know until hindsight, so let's just be real about all this, that these sellers were absorbed. Why didn't the market go down, right? Because there's a passive buyer here. That's what the limit order book's all about. So I see this behavior. So right here was the high volume, variable high volume node. I made these terms up when I started doing this in the mid-80s, 1980s, before probably some of you or many of you were born. And that's too low. Now I move higher. So I have support, and even down here, microstructure support. I'm going to put a little line here. There's the micro, and I have no way to know. My next level is going to be there. I'm going to throw a little line in there just so we don't lose these things. And now this is my retail price. So too low, microstructure, too low, retail. If I break above it, then I have my structured trades. They are potentially long here, potentially long there, long here, wherever they are. And I'm looking to go here initially. And what else do we know? 60. Right? 60. It's a level. So let's watch let's see what it does. Now, these are structured trades. They're available to all of you in the Bookmap Discord Trader Lab community. And remember, if the stream goes down, I will come back. Variable high volume node. We have what's called VPOC migration. I did a webinar on this specifically. It's in the Bookmap Discord Trader Lab community, and there is no cost if you want to check it out. Not to mention the community, which to me is, if you've ever visited, quote, chat rooms, this is not romper room. This is about business. So if you're inclined, you're interested in the business of trading, this might be the place that you want to go. And there is no cost currently. Can't say it'll stay that way, but at the moment, it's available to everybody. So this is support in alignment. Other support below us is here and here. Let's watch. So this is a potential structured trade in the Trader Lab. Watch. Resistance is here. Support is here. Structured trade. Okay? Now, watch. Where are we trying to go? You're asking. How about 60? What do you think? Not a recommendation. All these are on the chart, and anything can happen at any time. Watch. So, and I posted, all these are in the Trader Lab, and they're discussed in an ongoing basis. So what do you do with this? Do you just blindly sit here and go for 60, even though it's a structural target there? What do you do? A great question. What do you do about this? Do you just blindly sit here? Well, if it's in your plan and you have a statistical edge, yeah, that's what you do. The other part of it is, do you have a trade management process? Let's look at that for a moment. Now, I'm going to jump around a little bit because there's a lot of trades today. And subject to your plan, you'd be having, if you're in TraderLab, I would say, for the most part, a very nice day, just like yesterday. Now, it doesn't mean you'll ever have a nice day, and it doesn't mean if you come to TraderLab, you'll ever have a nice day, because you got to do the work. And I suspect, at least from my experience, and it's going on 45 years now, we all do a lot of work. But do we really ever move the ball forward? So right here, no idea. Okay, market's going up, 60 is my target. So let's talk about what we do. If this is too low, it's a retail price. Remember, trading is not predicting, it is shopping. This is micro high volume. Now, let's break it down into something called fractals. What is a fractal? I don't use time frame. I'm allergic to putting the market in a box. I am not rigid. Doesn't mean you can't be. I have found that predicting and measuring things with fixed structures is a disadvantage because that's what most retail traders do, and that's how they think, time frame. Have you ever thought maybe there's no time, but rather it's behavior? That takes the word time frame and tosses it. Then the substitute for time frame, and we had an interesting conversation about this in the TraderLab yesterday, and I know it might be semantic, but it's more important that you develop an understanding of market mechanics. So if the clock is not part of it, what is it? It's the participant behavior. And what does it create? Is there time here? Well, yeah, but is it fixed? Am I waiting for 5 minutes, 2 minutes, 1 minute, something? What am I waiting for? I'm waiting for this consolidation, which is the interaction between the sellers and the buyers. Passive is here. This seller was absorbed. That's, again, the passive side. And up here's the sellers. Buyers are down here. Now, the sellers created this rotation. The buyers are here and here because this seller went nowhere. So buyers are here, sellers are here. This is called a fractal. When I break high and now these buyers, don't forget, buyers are here, sellers are here, going to zero, right? Break high, where's support? It's right there. Break here, going there. If not, going north. What do? We break north. This now becomes a trade management opportunity. The high volume is there. This is a consolidation. You see this volume? It's created from this right here. And this is what an auction is. So if we're thinking about what is this, what are we doing here? We are tracking and interpreting the interaction of the participants. They are the ones who determine everything here. The buyers and the sellers, right? It's not our indicators, and it's certainly not the clock. So, break high. What is this? What is this? I know what you're thinking. What is it? Let's look at what this actually is. Let's look at what it is. What is this? Too high, too low, retail. And if this is too low and this is resistance and I break out of a consolidation, what might happen? I don't know. What do you think might happen? Right here. Now let's come up to the next one. Right here, I want to show you fractals, okay? That's all I'm doing here. Because this is a trade management opportunity. So right here, market breaks high. This is too low. Let's watch. Market breaks high. Right here, I have my auction. And what is this? Let's do the same process up here. Now, as far as I know, no clue. And when I tell you no clue, it's not my job to predict. So how can I have a clue? How about I am clueless? Not ignorant. I am clueless. And there's a difference. If this is support, and I test it here, and I test it here, and now If I don't break under this support, then my possibility is to go here. Now, the other possibility is when I see this, I can get out if it's part of my plan, or I'm trailing back here. I'm trailing back here. Right here, I'm looking for this. I'm trying to go to 80. So what happens here? I break. Now, where's my resistance? It's there and there. Let's just see what it does. Right now, it breaks here. So right here, break test is the opposite of break test. Test. Break test, you see? And then this is another layer of support right here. Let's see what it does. Now what? VPOC migration. Remember that, don't you? Let's just see it again. Let's just keep following the auction. I want to try to move along here because we can spend a lot of time with this, right? But the thing is, if you're in the Trader Lab, your goal is not to predict anything. It's to try to get an alignment and then have a trade management process. So if you got long wherever you got long down here, which is quite a ways ago, and you're going for 80, now there's another level up here too. I want to point this one out to you. This, I'm sorry, 60. So 60 is the level. And then if we get above 60, I just want to remind you, this is the next level. So all these are in Trader Lab and all these are on my chart before the RTH open. And then it's a matter of alignment. And like everybody else, I'm clueless. So what do we have here? Variable high volume node, level, come down to the mid. Now this is called mean reversion. Now if this is the retail price, here's a couple of things. And this is going to get a little complicated because we're in multiple time frames. Right here is support. So I have to clear this again and this to go up. I don't do it. I break below. As soon as I come below, support then is here, and I have my mid, and I got my VWAP there, but I got my mid. And this is the retail price. If I come outside, and I come back to the overnight high, and I come back to the open, and I have this level here, I either have a trade here or I don't. And I'm saying, because if you don't have a trade. You just sort of sit here and you watch it. Now, let's watch. Where are we trying to go? 60. If you don't have a trade here at the mid, then you don't have a trade. It's not a big deal. But what happens here? Let's look. Resistance. Resistance. Potential long. Come across. What happens here? Potential support. 60. If it's not your trade and you don't have a trade here, you don't have anything to do. You're just hanging out. Let's watch. VPOC migration. So what do we know over here? We come up here and I have a sweep right here. So this sets up the possibilities of the following. A pullback, a test, and if I can't clear this high, south, a counter rotation. What's my target up here? Now that I'm over 60, 67.5. All this is in Trader Lab. Now, I don't know, VPOC migration. Two possibilities here. Now, let's look at the possibilities. This suggests potential counter rotation. It might only be this. No way to know. This migrates up. I got to label this again. Variable high volume node. So that says maybe too low because that's our retail price and we're moving away from it. And then this is now the new retail price. I'm going to label this one. Got it in the wrong column. So what I'm doing is I am following the behavior of the participants, and I'm also interpreting what I perceive to be the language. So if I don't use indicators, I'm kind of in a situation where I need to do something to keep track. So since I'm not indicator oriented, in fact, I don't use any, What I'm doing is speaking language. So indicators are like Google Translate. And of course, if you want to do that, that's fine if it works for you. I have found that indicators are actually a problem, not a solution. Again, I'm only talking about my personal experience. It doesn't mean you can't. I have no opinion except for myself. So right here is my counter rotation. Here's my VPOC migration. Where's my resistance? 67.50. So here's the choices. I can go and get long here. 67.50 is an obstacle, and then my next target is 80. Let's watch. See? So for me, this is suggesting a counter rotation. This is suggesting a counter right here, a counter rotation. That's a sweep. And if we break down, then we have the possibility to come back to here or wherever. So let's look. And this, 60. So let's just look at the behavior. And let's watch the behavior. So this is our upside level, and there's no precision. It's an outside edge. This becomes too high. I have my sweeps, and this either sets up a short or an exit if you are long. If you took a long here, you're only trying to get to there. Does that qualify in your trade plan? It doesn't in mine, but it might in yours. One moment, please. Sorry about that. Had to get a drink of water. So this now is too high, and this was the previous support. If I break below it, I can come back and clean out these longs in this leg. Now, in the Trader Lab, you don't need to be doing anything. You can just trade your plan. Where do we come back? What's this? Wasn't this too low? So what do we do with this? If this is too high, this is retail. Now it's up here at the time. And I come to my location that's already marked because of what the participants said. Remember language. I'm looking for a long right there. There's my sweep. This suggests reversal right here. There's my location. This is a structured trade in the Trader Lab. And yes, your teeth will chatter. Welcome to trading. This sets up a long right here, and now you're trying to go there. Okay? This is a mean reversion trade. And I always like to say, yeah, it's mean. So this is resistance here, this, because we're under it. This is the next target. Let's see what it does. This is your scale, right there, actually. There, okay? So long Trader Lab trade, scale ahead of here, next target, and then out the top or whatever. Let's just see what it does. Next target, Trader Lab structured trade, and then you got this 67.50. Isn't that interesting? Let's look at the behavior again. We had a sweep here, which says reversal. We come back up to our target or resistance, going to the moon, 67.50. We get another sweep. What happened here? Sweep. What happens up here? VPOC migration. What are we thinking? North. But the sweep says warning Will Robinson moment. What happens here? You get taken out. Did you get paid? Yes. What do you do now? Well, a couple possibilities. We know at the moment this is resistance. We don't know what's going to happen. Welcome to trading. Now, so what do? Look, resistance, target. If you're in Trader Lab, think about it this way. If you got long in here or even here, stop under here, and you got your scale here, risk neutral, and you got out here, and you're running a 2 lot only, would that be okay? It's a question. Or you're running a 3 lot, and you're going for where? 80. And you know where these levels come from. I went over at the top of the stream. So right here, you're looking for a counter rotation, or you're just going to keep going. As soon as you see this, there's trouble. There's your target. There's your target. Here's trouble. Come down here. Right here, I see a sell sweep. It says to me support. It says to me rotation. I come back here, resistance. That's what the auction is saying. But it doesn't tell me what will happen. It tells me what might happen. So if I'm still long, I got to get through this level, and this suggests the rotation. Now, right here, got to get through. You don't get through, hasta la vista, and this is when your broker sends you a gift basket, and you're out of the trade. Wherever you're managing it, it could be under here, and you'd be taken out. It's all up to you, or you're managing it much tighter. You could be using this right here. There's your sweep. There's your break. There's your support. There's your sweep. Suggests back here, right here, you get your VPOC migration. Here's what you need. Up. If it breaks under here and we can't get back above, it's going to come back here. That's what I know might happen, not what will happen. You could also just bobble here and do that, right? But what do I know? I know this is an outside edge of a distribution in a higher time frame. In other words, this could be trouble for the longs. It could also be a short to come all the way back across. It's called mean reversion. Now, I know what it can be. I don't know what it will be. You guys following me? Now, you do remember 36 is an important level. 36 is an important level. If 36 is an important level, and I come under here, and there's the 36 that's on my chart, and there's a high volume node at 34. Let me try to show you these things. So I want you to see how you can put pieces together in the auction, because the market is an auction. Where's that level? Right there. Where's that level over here? Right there. It's on the chart. There it says level. Horseshoes and hand grenades is the term I like to use. In other words, they're areas of behavior, not areas of prediction. So area of behavior. So if I'm sitting over here and my jaw's on the floor, what do I know about here? The longs in this leg have sell stops under here. Well, when it looks like it's the end of the world, which it might be, and I come down to a level, if you're in Trader Lab, and this is also possible too, by the way. So I have my levels, and I don't know what's going to happen. So, and neither do you. Or if you do, come to Trader Lab, clue us in, because I'd love to know. But I gave up on that many years ago. I spent half my life in trading trying to predict and look for confirmation. I didn't understand it doesn't exist in this business. Never knew that. I thought it was just a matter of making what I did better. And because everything works, it does. I mean, gamblers in the casinos, they win. So everything works. Except over time, the casinos extract the dollars from the gamblers. Why is that? Have you ever thought about it? Have you ever thought that maybe this business is gaming and it's not predicting? I mean, if the casinos can't predict anything, do you think you're going to be better at it than them? Think about it. So what do I have here? I have buying icebergs. I have 300 stops coming out. Thanks for playing. Look forward to the gift basket, maybe a ticket to Omaha Steaks. And the buying icebergs are here. So right here, I see absorption. I see the stops. And where are those stops coming from? The previous swing. I'm in a location. And this is also a location. See, it says level. So I have no idea. What I do know is This is on my chart and it's material. So I come back and what is this? You're going to say to me, how about this? It's a microstructure. It's an auction. And let's look what else it is, just so we can talk about this. I don't do this when I'm trading. I just look over to the right. In other words, this is a consolidation. In here is the high volume. That little node there, this is an auction. Too high, too low, too high, too low, retail. Well, if the volume in here, chop, 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 I have passive buyers here. There they are, the icebergs. I have my sell delta, which is market orders. Sell stops become market orders, going to zero, Lewis. And then I chop here, and I'm not taking this buyer out. Why? Because there were buyers here too, you see. So I don't know that. I mean, right here, if this volume is too high, we're going to keep going down. Right here, this volume is too high, we're going to go down. Right there, we test it. Hasta la vista, baby. Down. Is this volume too high? We're going to go down. What do? We go up. See? So once it breaks up, then I'm looking for it to return back up somewhere. So then my job becomes to either, if I'm on a short, to cover or be looking for a long. I can do either. I can do both. I can do none of the above. It's all subject to anticipating behavior at locations, not predicting it. And what else do I see here? I'm looking for a reversal. This is a sweep. This puts me on alert to look for a reversal. I was showing you those at the high of the day. Okay. Sam, I see you posted here that the VIX is picking up. Does that mean it's going down or going up? Remember, the VIX is not the dog. It's the tail of the dog. The dog wags the tail. The VIX is not material to trading, in my opinion, as a day trader. It is hindsight. It is just something that's letting you know what already happened. And the fact the VIX, you're saying it's picking up, if that means it's going up, wouldn't that mean that the market has more fear in it? So, pull back, support, chop, break. This is a potential trigger or nothing, or an exit. It's anything you want it to be. So let's look. And where are we trying to go with this thing? Isn't 67 our level? So we have 60. This is important. And out the top is what we're looking for. We're trying to get to 80. Where's our resistance? It's there and it's here. If you get long, your stop's got to be under here. You're going for this. And then to there and maybe out the top or not. Let's look. These are structured trades. So let's watch. Got to watch the sweep here. It says counter rotation. We get the opposite sweep here. It says potential higher. Let's watch. ES is going down. Is the ES going down, Sam? Buy sweep, counter rotation. There's your counter rotation. Where's our target? 67 or 66, whatever it is, 67.5, right there. That's the target. I'm not seeing the current market. Is the market going down? Well, for me, since I'm a day trader, I find the VIX is not worth my time or energy. It's a quote indicator. Meanwhile, back at the trade, what do we have? Again, it's fine, you know, but I used to have 32 symbols that I used to follow. Bonds, dollar, metals, VIX, tick, TRIN. I don't even remember. I have none of it because I have to eliminate, for me, conflict. If the VIX is going up and I have longs, Does that mean I'm looking for shorts, or does it mean I'm taking longs? Remember, we are trading the dog. We are not trading the tail of the dog. The S&P wags the VIX. It's not the other way around. The more you have on your chart, or more inputs you have, the more potential for conflict. The more conflict you have, there's an old saying, paralysis by analysis. I don't have time for that in my plan. I have to be able to read the behavior at locations. Here's the VWAP in the mid. Now, should you guys be taking this trade? That's trade plan specific. What do we know? We have over 90% probability of taking out the first hour's high or low. We are auctioning to the long side. If 67.50 is too high, which is what that is right there, and I see the sweep, this suggests the counter rotation. That's what this is. Now the question becomes, do you get long at the VWAP in the mid? And that's a question. I might not. Others will. And it doesn't matter what I do, because you can't follow what I do. I can't follow what you do. But I do trade a certain way, and I just trade what aligns with my plan. And I'm not concerned about getting every wiggle in the market. This was our next target up here, 80. Remember? 80. So if I don't get a trade that goes to my next target, remember, top of the stream, there's the target. Now, where's the stops from yesterday's shorts? It's above yesterday's high. Do you think it's possible we're going to take those guys out? Sam, it doesn't mean that Sam is saying that the VIX is picking up, and it means the ES is going down. Actually, Sam, the ES is going down, and then the VIX picks up. Isn't the VIX a reflection of the behavior in the ES, not a predictor? It's an important point, by the way, not a criticism. You got to understand the difference. Very important. It may sound like criticism. It is absolutely not. If you guys are listening to this stream in the Trader Lab, what we need to do is developing retail traders is remove everything that is superfluous. What helps me trade right here? If the market rotates down, then the VIX will move up. I have to be right here. If the VIX is going down as the market comes here and I have a short trade, do I wait for the rotation down so the VIX can rotate up? That's the question, Sam. It's just a question. And it doesn't mean traders can't do that. I have no opinion, except I know what it did for me over my years of trading, and that is conflict. I cannot get out of a trade here if my VIX, if I'm trading the VIX, I'm not trading the VIX. I'm trading the S&P. So I'm not trading the VIX. If I'm trading the VIX, I'll trade the VIX. See what I mean? That's all. I know myself back in the years, I'd be looking at the bonds and looking to trade the S&Ps off the bonds. I would trade correlations. I'd then be looking at the dollar, the DX, and so I'd have these equations of sorts or mental processes of DX, metal. Oh, the metal's going up. What's the dollar doing? Dollar's going down. Okay, what are the bonds doing in relation to the quote inflate? You know what I mean? Threw it all away. And I threw it away because it all worked at times. And it also scrambled my brain because I'd start thrashing. And then what I found was I got more clarity as I removed conflict. And I'll tell you, most traders I know, not of course all of them, but most guys I know who are career traders are not doing that. Doesn't mean you can't. I'm sure there are some who do. I'm not saying that. What I'm saying is, if you're doing what most retail traders do, you might want to rethink it. That's all. Yeah, Sam. Yeah, that's cool. That's why we're all here in the Trader Lab, guys. Anything you've probably thought of or done, because I've had 45 years, regretfully, I've already done it. Um, I grew up when indicators were in their infancy. So when I first started trading, there were no indicators. There was classical bar charting. So I got to go through and became what's called a technician. They didn't exist when I first started trading. It was all fundamentals. So the guys who were fundamentalists thought we were lunatics, voodoo. You have no idea what it was like to be in an environment of fundamentalists and when technical analysis was new. So that's when I started with technical analysis, fell in love with it. Unfortunately, I fell in love with a defective process, and I thought it was just a matter of, make it better and work on it. And same thing you think. I know. That's why I'm in the Trader Lab with you guys. Too many years were lost trying to fix a process that was not in alignment with the business. Indicators are fine, but I don't think we understand for the most part what they actually are and what they're not. They are not the answer. They actually are part of the problem. And you don't have to accept that because for you that might not be the situation. But I'm going to say most retail traders don't succeed in this business, and there's a very good reason. It's because they think it's a business of time frames and indicators. It's really not. Again, just my opinion. And again, my truth is not necessarily your truth. But I can tell you, I got a bit of experience. And that experience was that education came at a big price. See the behavior here? Why is this material? Why is 80 important? Now, this is still on the hip parade. Why 80? Why at the top of the stream did I talk about 80? Where does this come from? 80 is right there. Can you see it? 80. So why would I be looking at 80 as a target? Why would I be looking down here as support? It's all here before the market opens. I don't know what it's going to do. So I have this level, which I showed you. I have that level, 60, and I have 80. Does this make sense? Are you guys tracking? Can you see how the auction might be something? Yeah, Sam, I understand RSI and all that's all fine. I don't use any of them. And the reason I don't use them is I did. Everything works sometimes. But the thing is, and it's not that you can't align indicators with the auction. It's not about it, that. What I have found is if I start putting indicators on, I am obscuring what's happening right here. Or it's not happening here and I'm looking at my indicator. Where's my priority of inputs? How can I trade without indicators? Here's why. Let's think of an indicator as Google Translate. It's fine. Okay. The thing is, am I going to keep using multiple translators in multiple time frames? What does that do for me? Or am I going to learn to speak a language? And when I interpret the language, I know what it says. What is my indicator doing here? I mean, do I get short here? Do I get short here? Where do I get short? Or do I not get short? If I get a little ripple here, is it a short? Is it an exit? Where is it? Well, if I'm not using an indicator, it puts me right here. Right here, I know there's a change. Right here, using order flow, I know there's a change. I know now on this behavior in this fractal, this is a potential short or an exit. I don't think my indicator is going to do that. My indicator will tell me short, 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 or my indicator might tell me get long, get short. I don't know what it does. But for me, This is either an exit of a long or a short. Why? Location. Now I have yesterday's high. Any shorts up here are high risk. So maybe you don't take a short up here, you know? Sam, I understand indicators to a point of nausea. And I spent years trying to get them to be consistent. What I didn't understand was they're just not what the market is. That's not the market. Now, I'm not, and this is not criticism. This is for all the retail traders out there who are experiencing something called Trader Groundhog Day, where, because everything works. The casinos don't work that way, but we're in a gaming business. So I found that instead of trying to take and here's another little thought for you guys. If I was to open my investor RT, which I don't think I can do without creating big trouble, let me see if I can do this. Maybe I'll try. Maybe I won't. I don't know if I can do this. This is my higher time frame software. These are technical indicators. Which one? Here's the next question for you. Fibonacci arcs, extensions, exponential moving average, equi indicator, empirical mode decomposition. I don't even know what that is. Elder, you remember him. Elastic volume weighted moving average, gap runner, Heiken-Ashi, that's nice. Holiday tree. What's a holiday tree? Linear regressions, MACDs, math lines, adaptive moving average, momentum, money flow, Chaikin channel, adaptive. Do I need to keep going? And that's only N. Parabolics, period candles, point and figure, position price statistics, random walk theory reference, acceleration, reverse engineering, session. And this is just sine waves, slope waves. You get the point, right? Why do we have all these indicators? Have you ever wondered why? Is it because one's better than the other? Why? I have an answer for you. They don't work except randomly. So you could spend your life going down your merry way of time frames and indicators looking for the right mix, and that's what most traders do. They run out of time, they run out of assets. And then they're going to tell you that nobody can make money trading. If you come to Trader Lab, you're going to find out that's not really the way it is. However, you have to be asking yourself the question, why? If you don't know the answer, then you're still going to be asking the questions. And the other part, the catch-22 is we all have winning trades, even if we close our eyes and we just had one button to push and it wasn't buy or sell, it was just do something and you'd have winning trades. That's called a coin toss exercise. Basically, flip a coin, says buy or sell. You just do it, you're going to have winning trades. Well, what does that tell you about indicators? I'm posing the question, and I have a certain amount of passion about this because you haven't spent as many years as I did trying to get it to work. And I went from individual indicators to trading systems that would take all these indicators or derivatives and the ones I created, put them together, optimize them, and then have a quote system that would actually do the trading. And I did this when I was managing funds. So I was constantly trying to fix it because I was taking the past, tweaking, tuning, which is what most of us do with indicators, just another way to do it, curve fitting, and then doing walk forward testing, and then thinking that going forward, we're going to get the same metrics as we got when we curve fitted. Didn't work out that way. It would constantly be breaking down. So I set up a schedule of re-optimization. Optimization in systems are just curve fitting on steroids. And again, I had to do that. I was trading multiple asset classes, but I learned the defect of that process. But at the time, I believed that was the only way to do it, because that was, at the time, the only way to do it. This is before I learned about the auction. And then I learned about the auction around 1985, I think, or somewhere in there, and from Peter Stottlemyre, who created the whole thing, at least at the CBOT. So I sat down with Peter and learned market profile, and still couldn't trade with it. I just didn't get it. I was too hung up on prediction and certainty, which is what most traders are looking for because of their primal wiring. I didn't understand that this thing is dynamic and every moment's unique, and it's all about the interaction of participants trying to determine what's a fair price. And the market rotates because in this interaction between these participants, this price is too high, but this price is too low. And in the middle of this price is where the volume is. And the market rotates because it's an auction, and it does it at all time frames and fractals. Once I understood that, I realized that I'm using a defective process to create certainty and predictability in an environment that doesn't exist. So I'm trying to force trading into a method that is not in alignment. So I had to change me, not try to force trading into something that will give me comfort to meet my psychological needs of avoiding risk, the fear, and the uncertainty. By the way, the uncertainty is 100% all the time. So the way to get over uncertainty is to create predictability, right? Well, what do you do if there is no predictability? Do you still try to create it? Or do you change how you operate in an environment of 100% uncertainty and then adjust to that? You see, that's the question. And if you've been working on creating predictability and certainty, and you're not a profitable trader, there should be a message in that. And all those technical indicators I just showed you in a very robust, high-end trading platform, Investor RT, are not the answer. Now, some of them might be supportive, but they are not the answer. Then why are all those technical indicators in there? Question. Do you have the answer? Yeah, Sam, I don't use any moving averages. I don't use any of that. So if it hits a 35 EMA, you can have as many EMAs as you want, and it's certainly going to hit one of them. That's the point. Which is the right one, Sam? And are you able to activate, and do you have a statistical edge? The answer lies in being able to execute and having an edge. If you don't have an edge and it's random, then that's not a sustainable business model. That's really all this is about. The Trader Lab is about the business of trading. It's about helping traders build out the business, a career path, and understanding and learning market mechanics. However you get there doesn't matter. What does matter is if what you or anyone is doing does not have an edge, you're not going to sustain yourself, but you're going to have winning trades. Gamblers win. Casinos pay the gamblers, but the casinos extract the dollars from the gamblers because they only play games that have a statistical edge. So the gamblers get paid. That's called overhead and costs of production. But they're building larger casinos. I don't see the gamblers walking away with the dollars overall in a random environment with a random distribution of outcomes. That's trading. So if you can understand the business of trading, you can then maybe build or design a process that allows you to operate in that environment. The way the casinos do it is they only play games that have a statistical edge or probabilities. They don't make it up, and they're not using indicators. They're just using anchored inputs. What is an anchored input? Well, I did a primary webinar. It's available to everybody in the Bookmap Discord Trader Lab community, and it talks about anchored inputs. It's the same as blackjack. They just deal the same number of cards. They play the game exactly the same way. They have no control over the cards coming out of the deck or how the gamblers play the cards. Okay? I think we can agree. Well, if they don't have control, then why are they just doing the exact same thing over and over again? It's because that's the only way they extract their edge. They're not using multiple inputs. They're using anchored inputs. Big difference. So when you have a ton of indicators, whether it's EMAs or SMAs or envelopes and all this jazz, that's a lot of random input. So if it's random, how can you measure it? If you can't measure it, you can't replicate the anchor. If you can't anchor it, then you're just gambling. And over time, gamblers don't win. It's as simple as that. And again, I'm not here to contradict a belief. The only way you can believe anything for yourself, and it's not my word, I'm only sharing my experience. The only way you can believe anything is if you can measure it, and you can't measure it unless it's absolutely 100% consistent. If it's 100% consistent in a random environment, then you can measure it. Then you know if when a specific condition shows up and you have a trigger and you've given it a name, whether it has a statistical edge that favors you. Do you have one? James, where do I put my stops for large moves? I put my stops under structure, and I target structure. So if I get long, I'm not trying to hit the grand slams. I'm trying to trade the rotations into areas where I know there's targets there. That's my target. I also know that getting short is high risk here because there's buy stops here. Now, as a trader, I have my choices. I can just exit my longs because I'm looking for these guys to get hung out to dry. If the market did, here, let's look at this again. If we did the Acapulco cliff dive yesterday, and this was our target, and if you followed the stream yesterday, this was the target, got within a few points, horseshoes and hand grenades, and now my support is there, which is the current low of the day. My resistance is there, the current high of the day, but there's buy stops here. What's the probability? And by the way, speaking of probabilities and past performance not indicative of future results, there is, and I always give statistics, I don't have time for it today, but over an 80% probability we take out either yesterday's high or low. Now, while anything can happen, and you would have these statistics, they're available to everyone in the Bookmap Discord Trader Lab community, and there is no cost to visit Trader Lab and become part of this community. What do you think? 80% probability to take this out. What would you be doing? Would you be selling this? Maybe, if it's in your time frame or fractal. Or would you be just using counter rotations for an 80% probability? In your trading, and this is for everybody who's visiting the Trader Lab today, in YouTube or elsewhere, are you aware of that? So the question was, where do I put my stop? James, I just trail my stop, and I let the market do what it's going to do. I've accepted. I don't know where the next rotation will happen, what the depth of it'll be, or nothing. Casinos can't predict the outcome of any hand. I can't predict anything either. I've removed my need. Now, I'm going to tell you, emotionally, I have feelings about it because we're wired for that. You know, fear, greed. Oh, I want to get all of it. Why didn't I get out at the high of it? You know, that kind of thing. Well, that's kind of a useless, that's noise. We still feel it, by the way, because there's a lunatic in our head. It's called Hyde. Jekyll and Hyde. This said counter rotation right here, by the way. That's a sweep. This is a buy sweep. It says counter rotation. Now, what we don't know about these sweeps is what's going to be the amplitude. Here, sweep here, counter rotation. You can see them. Sweep here, counter rotation. Sweep here, counter rotation. This is how Bookmap can help you. Micro high volume structure is here. We have longs in the market. We can come back here. We also have structured trades in the Trader Lab you could be anticipating to get back in alignment with the market. All this is in the Trader Lab. Doesn't mean it's going to work for anybody, because guess what? You come to Trader Lab, it's not a trade calling room. It's a high tier educational process, different probably than what you've come across in your travels. It's like it's really for building out careers. It's no shortcut. This will require you to do something that most of you probably haven't done. This is not about assembling time frames and indicators and thinking you're going to have an ATM in the basement. Let's be realistic. Why is the retail failure rate so high? Why? They're all doing the same thing. And if they're doing the same thing and you're doing what they do you really think it's just finding the right mix? Is that the answer? Is that what trading really is? Well, maybe. It never was for me, so I don't do it. In fact, if anything, I advocate not to do it because you may run out of time, and I paid the price. So when Bookmap asked me if I would do the Trader Lab, I agreed to do it because I don't think anybody should have to go through the learning curve I went through. And the thing is, many traders are not going to be able to let go of the need to be right and to predict. It's our psychological need to avoid pain and to get approval. There's a lot more to this than what meets the eye. It's what's going on under the hood in your mind, in your primal wiring. And that primal wiring causes us to make choices. Those choices may have nothing to do with this business. It is more about our needs emotionally and psychologically. And most traders never get an understanding of that. You come to Trader Lab, you'll learn about it because it's, I think, the largest impediment. I believe anyone who comes to Trader Lab can learn how to trade. Now, it doesn't mean you'll ever be successful, but that's my personal belief. It's not a recommendation. What I also understand is how the market works. And if you understood how the market worked, you might understand how to navigate this behavior. What is going on right here? Why might we come here, and why might we come out here? Why? Do you know that? Would you be taking shorts, or would you be exiting longs looking to get back in for continuation trades? Or would you be looking at an indicator? What does your indicator say? Does it tell you to get long here? Does it tell you to get short here? I don't know what it tells you because I can't look. I'm not looking at them. I'm looking at this. This is an outside edge of something called a distribution. When I come outside and my volume dries up, it's almost like going to the store, and when it's on sale, the sellers don't keep the price here if the buyers are absorbing the sellers. I get a sweep. What do I get? I get this. Now, what else do I get? If I have a sweep here, I get a counter rotation here. We don't know the depth. I get a sweep here. I get a counter rotation. I don't know the depth. I get a sweep here. I get a counter rotation. I don't know the depth. But what do I have in the auction? Outside edge. What is that? Too low. What's this? Retail. Where's my outside edge? Here and there. What's my target? There. Now, you're going to say, well, how do you know that? Let me give you the straight oil from the can. I don't know anything. That's the beauty of trading. We don't know. So that's kind of the thing, you know? Why are there buy stops, ZT? There's stops always on both sides of the trade. Buy stops are there. Sell stops are under here someplace. They're in here. Stop at iceberg. See, there's 27 sell stops. There's 19. There's buying icebergs, taking the other side of the trade. Stop an iceberg detector. Here's the sweep. I'm looking for counter rotation. Now, this is an indicator, right? But what kind of indicator? Order flow. Does it tell me to get short? No. It tells me to anticipate something. What is my number one input? It's this, the auction, not this. This says, maybe rotation. What does this say? rotation. What does this say? Rotation. If it's in alignment with the auction, it might be a reason to be looking for a long. What's this? Volume. Let's look at this. Where's the volume? It's here. What is this? It's a consolidation. What is a consolidation? Sellers, buyers, sweep, up. Then what? Sweep, rotation. I'm in something called balance. But what do I know? Let's go back to what we know. This is resistance. But there's one more little piece. Sorry, guys, about the issue there. I will ask if Dan will be able to splice this together. So it's available to you guys. Please accept my apologies for the technical problems. When you're out in the jungle, things happen. So have a great weekend, everybody. Hopefully we can splice this one together. I think it had some value. Sam, thank you so much for your participation, and everybody else in the Trader Lab. It's only by this interaction that we all get better. It takes courage to ask questions and to become part of the story and the, quote, debate. Those who participate, those are the ones who progress. And all of you who are in the background, please remember, put yourself out there. Leverage the collective experience of everybody else here. We've all walked in your shoes. The whole idea of Trader Lab is that we all get better together. Have a great weekend. Thanks again, guys. Appreciate it.